Hello, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. So, we had another up week in the market, kind of traded down earlier in the week and then rallied back up toward the end. Potentially, there's some more of this to go. At this point, I would say if the market continues higher here and takes out this high right here, then this could be a different type of pattern than a triangle. The triangle is still viable here. It just needs to turn down. It needs to start turning down into this area right down here. But I would say that if it does go higher, which is possible, then what we're looking for then, let's say we get next week we get something that looks like, this that took out this high back here. Maybe it looks like so, and then let's say if it takes out this high and goes a little higher, then we could very well get the move could be back down to here to the first low. So let me back out and show you. If this market next week trades up here and it takes out this high is key, then it'll probably come back to at or near around this 2320 area. So just boom, right down here. Let me zoom out a little bit so I'm not too close. I can get more of a field of view here. So let's say that it trades up here early next week, maybe to there, and takes out this high. This high is very important. So if it takes out that high, then I think odds favor probably a move, not in a triangle, but down at or near this previous low here. Okay, could go a little further, could go, a little further than that low, but not much further. Should be near this area here. In fact, let's do it this way. Let's put a box on there, because a box indicates a zone as opposed to a particular spot. Sorry about my voice and everything, by the way. I've had allergies and it turned into something else, and I'm still kind of fighting it. So really we could have if the move down starts early next week and goes down, then we're likely the triangle will still likely hold. And so, that's an A. A, B, whoops. Let me take that away. A, B, C, D, E, and then higher high. Okay. There's A, B, C, D, E, and then higher high. So there's five waves in a triangle. But if it takes out this old high, let's say Monday or Tuesday, and then starts to reverse, it's probably coming down here below 2325. And then we should get a rally. If it does that, we should get a rally up into this area around 2500, 2450, 2500. So I hope that narrows things down a little bit for you. It's a little on one hand this and on the other hand that, but it is what it is. 13-week Treasury, you can see, really rallied this week. Right in here, kind of broke out of this little consolidation area. So the stock was kind of consolidating right in here, and then it, boom, popped up. Could pull back a little early next week, then pop up a little higher. But we're getting very close to the end of this move, and the Fed pretty much going to raise rates. I mean, I think really people are going to be a little bit behind the curve on this whole Fed interest rate thing. They're talking about having 3 raises this year, and really nobody knows, but I can just tell you that if this really starts to take off, the Fed's going to raise a lot more than 3 raises this year, or they're going to raise like 1.5% per raise. But I think the expectation is that they're going to have 3 raises, and each raise is going to be 1/4 of a point. And I just don't think that's going to be the way it's going to go. I think these rates are going to move much higher than people can imagine at this point. Now, again, I'm stopped up. I apologize. This was right here. This highlighted yellow was an important low on the 10-year Treasury. And so, you know, this is likely the bottom in the 10-year Treasury, which, by the way, is such an important instrument because almost all loans are based on the 10-year Treasury, whether it's your home loan or car loan. So this is a very important chart. And what it could be telling us is that the 10-year Treasury is done pulling back. You can kind of see here, and we've been talking about this all along the way. I talked about closing the gap, and it still could do that. So I picked 2 targets. One was here at the close of the gap, and the other one was here, the midpoint of this large white candle right here. So both of these are good zones. I suspect that it looks like it's bouncing here, but I suspect that this is probably going to make a new low down here. But then Katie barred the door because this is going up, and away pretty quick. Let's see, what else do we have? We've got, let me switch to, well, no, not the euro US dollar. Let's just look at some of these other countries. Germany gapped up, ran up, and looks really good. It's probably on its way to this blue box that we have here. Remember, the blue boxes that I draw on the chart are based on the larger degree swing, pivot swing previously. So if we just look at Germany here, this was the previous important high, and this box is just a certain distance away from this high. So this is a logical place for the stock to, in this case, its stock represents a country. This is a logical place for the stock to stop, consolidate, and even pull back before making a new leg higher, if it's going to do that. So let's keep an eye on this blue box here, just north of $32, and that should tell you almost everything you need to know about that particular market. And here's the Japanese market. I think we talked about last week it had touched the box, but it was pulling back and likely was going to make a push into this box, which it has, and it could go a little further. So the UK, again, they pushed pretty hard into this box, and it could go further. I think the British pound is going to rally quite a bit, but you know, this particular stock, to me, this whole uptrend run in here. Let me put a channel around this. It looks somewhat see how it's pulling back inside a channel. That's indicative of a corrective wave, not an impulse wave. So we'll just have to wait and see, but I wouldn't expect the United Kingdom iShares to get out of this high slope line here in red. It's probably just going to touch it, or maybe just follow short of it and then roll over and go lower. So keep an eye out for that. You want again, when the bear market comes, they come get everything. So you need to. There's really no safe place to hide or any way to really diversify your portfolio so that you can avoid, a major bear market. Some people try, and not many succeed. Um, to the extent I can make a recommendation, which I shouldn't do. Um, you just want to kind of step off the tracks and let the train go barreling by. That's really how you want to handle that. Especially with interest rates so high, we could have some pretty massive defaults and things like that just basically cause money to evaporate from the economy. So look out for that. All right, let's switch over to the Thinkorswim charts, and let's look at, let's see, let me pull this up like this. Yeah, so here's the Euro US dollar, and you can see we had some really strong price action, and it's unclear to me what's happening here. I mean, it could be a sort of an ending diagonal, although I don't think that's normal for this area of the trend. But we do have a little overthrow here, so that does kind of speak to an ending diagonal. Some of the effect you get on an ending diagonal is you tend to get some overthrow from the channel, assuming this right here is the channel. I was trying to short the euro this week, obviously not doing well on that particular position. Another way to, let's see, let's go back to our pointer. Go back to a weekly. So you can kind of see here, I drew these tops. We got a little overthrow with this candle. But you could definitely see how this could be a 5-wave move in an ending diagonal. I just can't recall whether an ending diagonal, I think it can happen in a wave 4. But there's some rule there, and I can't really remember what it is, so I'm not going to attempt to, because I likely will say it wrong. But this should start rolling over next week, and we should end up taking out these previous lows down here. All right, let's look at we could look at the Dow and the Nasdaq. The Nasdaq is clearly leading the market. I mean, clearly in a pretty obvious way. The Dow and the S&P look more similar to one another, which is actually not very uncommon. This happens all the time in the market, especially toward the end of the trend. You get some exchanges, some markets will diverge from others, and the correlations will cease to exist. I would say the Dow and the S&P are very similar. If you look at the Wilshire or the Nasdaq or something like that, the Nasdaq especially is on a tear. Let's just look at the Nasdaq real quick. It really is on the move. In fact, the Nasdaq's probably already through its wave 4, and it's making out wave 5. That's my guess here. So you can see it's quite a bit higher than this old high and this last huge swing up right here So it's already launched from that and kept going. So it's hard to say. Usually you want to see some alignment between the indices, and it's really hard to say what's likely to happen given this kind of divergence. But this is probably not as bullish as we would like for it to be. But that's just my opinion. Oh, let's see. What else did I want to point out in here? Yeah, I don't see anything else in that list that I need to cover. Last week I think we talked about the British pound U.S. dollar, and if you look at this instrument on a really long-term basis, this looks a lot like an ABC, and this looks like the first move off the bottom. So currently I'm looking for a time to get into the British pound U.S. dollar, because I think basically the dollar is going to hold on one second. All right, sorry about that. I had a phone call. Anyway, the British pound US dollar, this looks very corrective, and I would say the British pound is going to be moving up here pretty soon, or it's already really started moving up, but if it does pull back, you probably get a pullback to a higher low, maybe somewhere in this area, and then have it continue to rally here. So to me, this is a good long play for when the market starts to top. In fact, the market's pretty much maybe a month or two away from topping. It's hard to say, but you can see here the FXB, which tracks the British pound US dollar. We had a low here. We had a rally up, a pullback to another low, but higher than the previous low, and a rally. That's all very good when you're trying to pick a bottom, which normally is not a good idea. But I think mostly what people are talking about when they're talking about picking a bottom is this is pulling back and they're buying right here, and then of course it runs up, and then it makes a lower low, and so on and so forth. But I would say that if this market trades above here and stays above here, let's say it rallies a little higher here, maybe here, and then pulls back and retests this 124.38 line, then that's probably a buy signal for the FXB. So this is key. I think it's going to be important to try to identify stocks that you can buy and be long in when the market's selling off. So keep this one on your watch list. Let me go back to the TOS charts. Let's see if there's anything else I want to cover. There's really not. I mean, gold and silver. Silver is pulling back pretty hard, and its chart is a little bit more clear too. So it looks like to me this is kind of this is a large degree A, and then we've got kind of an A, B, C happening here, where this is a 1, 2. So 1, 2, 3. Probably up into here somewhere, a little bit of a 4, and then a 5, maybe up into here. So silver could easily run up into $30 or so before we get a larger degree pullback, which should take us way back here, to around $10 or maybe a little less. So, but if you wanted to trade silver like the SLV, if we go to profit charts, and you type in the SLV. This is paper silver, by the way. I don't recommend buying a lot of this and holding it. You really want to try to position yourself with the physical metal and actually own silver or gold in your hand, just as protection the government might not do the right thing when it comes to the value of our money and preserving its purchasing power. The key is, though, to buy it, at a decent price and not pay a premium for it. Don't wait till there's, a feeding frenzy on Wall Street to buy silver before you buy it. Might be a little too late at that point, or gold for that matter. We've been watching the euro. The euro has been frustrating for me personally because, let's look at a daily chart. This trend line had held pretty much at here, and I thought it was going to hold here too. So I took a position right in here, short, back down this way, and of course it's going against me. So I'm trying to hang on to it, but the reality is, if it gets much higher than this, I'm gonna have to sell this position and try to, maybe reevaluate whether this is a short play or not. I can't pull up the dollar, but the dollar literally is like the inverse of this. I can't invert. Yeah, I can't invert this this chart, so I can't show you what I'm talking about. But we're still right in here, and I don't really want to sell it, or I don't want to buy it back just yet. But if early next week this doesn't start to turn and go this way, I will be selling or buying back my position, my short position in the euro US dollar. All right, everybody, my voice is starting to go, so I'm going to go ahead and sign off tonight. And if you want to make any comments, just do so here on the YouTube channel. You can always follow me on Twitter with @InvestorClass, @InvestorClass. Or you can just make a comment here on the YouTube channel, and I'll try to respond to those. Okay? Have a great weekend, everybody. Take care. We'll see you. Bye-bye.